Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel. For our next session today, it is After the Close, and I am your host, Kevin Horner. Thanks for being here, everybody. I am joined by my friend Scott Thompson in the chat today. You are all lucky to have an opportunity to engage with Scott today. He'll get to questions and comments that I might be unable to get to during our discussion, but I'll certainly try to reply and bring your conversational details into the discussion today. We're talking about a little bit of pattern recognition and, more importantly, how much might traders incorporate what we see from the patterns and price action on stocks to help us build our trade opportunities. So today we are going to look at least one detailed full bull flag example that's going to have some rules associated with entry, rules associated with our exits, both above and below our entrance points. So we're talking about stepping into example trades today that are going to be defining our risk tolerance and our comfort for entering the trade. And we're going to give you a few concepts to work with as takeaways, things that you can start to consider and build into your own trading plans and trading process. So hopefully this will be an ongoing conversation that'll be valuable to all viewers, because we are going to be revisiting these positions as we go forward in this class. We will surely meet here once a week, same bat time, same bat channel on Thursdays at market close. So I'm glad you're all here with me today. Let's work through some disclosure detail, and then we'll get into the conversation side of things and start laying some foundation for this approach to trading and considering patterns that we can take forward into the next trading day. Think of today's class as kind of like that. I've just exited the work day for myself, and I'm coming to my opportunity to see, how did the market treat me today? What are the things I should be looking at for tomorrow, or maybe down the road into next week? So essentially giving us that list of stocks that we might just frequently review and check in on daily or weekly, depending on your time frame and approach to trading. So with that, let's move to some disclosures. Oh, of course, remind you to follow me on X. Remember, I'm available there at Kevin Horner CS, so don't hesitate to do that. I'll try to post for you throughout the week. You'll get a number of charts and some reminders about the classes that I do host and where you can find me. So it's important to remember, though, that our conversations are always exclusively informational and educational. We do not make recommendations here. We do not endorse a specific approach to trading. We are going to be giving some specifics, but remember, everything we talk about today is designed to simply open your eyes to your process. We want you to think about things from your standpoint. It's very important that you understand your own personal tolerance for risk and what that means to you. We will be talking technical analysis. Technical analysis should be considered just a piece of the overall decision-making puzzle. We do not encourage you to make decisions exclusively off technicals. And while we will not discuss options today specifically, do want to be aware the option trading carries a higher level of risk. And in order to trade options at Schwab, you do need to be approved in each account individually in which you would like to trade options. Now, you are also allowed to maintain differing levels of option authority among your different accounts. You do want to be familiar with the characteristics and risks of standardized options. So with that, everybody, let's see where we are going to get started. It's going to begin with, actually, instead of a potential example trade right off the jump, I did want to start out with just a quick look at the S&P 500. If you joined me this morning for Trader Talk, we talked about the potential of getting to that 6147 level. Today's peak was, interestingly, 6146.5, making the potential for a new high trade in the SPX very close, right? We're less than a point away at the close today, at the high today, I should say, and about 6 or so points away at the close. But it is appearing as though we have the chance to test that 6147 come tomorrow morning. We'll see if that results in a pullback a pause, a breakout, lots of opportunity at resistance here. Reminder, when we talk technicals, you heard me say it this morning, everybody. When we talk technicals, the reminder is that it's more if this happens, then this is what I'm going to do type approach. Technical analysis can be instructive and insightful, but not necessarily predictive. So by moving through certain areas, historical price levels, traders will start to assign their understanding of the next level of risk they can sustain. And we'll talk about that a little bit as we work through things here today. Now, after looking at the S&P, you might be feeling, maybe you're feeling a little confident. Maybe as opposed to thinking that we're going to stop and pause at this upper level, you might be feeling confident about the broader opportunities. It's true, we don't get too many big moves like this that suddenly get wiped out. That said, nothing is ever certain as it relates to the market. We know that. So we're always encouraging you to position yourself properly and take advantage of opportunities to look for ways to exit winning trades, look for ways to protect your capital, selling, for example, on weakness or when trends shift, when trends break down. Now, today's conversation is going to start from a scan that I built, locating a group of stocks. I decided I wanted to peek in a space that's been relatively hot. So I'm going to pull up the software group. And I say relatively hot, you'd be pretty hard pressed to suggest that this is anything other than a bullish trend in software here, right? We have seen the entire space. This industry has done quite well, certainly coming off the low. From a return standpoint, if we incorporated the absolute low to where we finished today, up about 43% over the last it's just shy of 12 weeks, right? About 11 weeks or so here. An incredible move for the space. We've had multiple instances along the way where software has done very well. We recaptured the 20-day moving average right here, and we have yet to deviate below it. We have not yet closed below it since that began. That's quite a long time. It goes back to April 22, it looks like. April 23, excuse me. In fact, the same day that the S&P 500 and the NASDAQ 100 recaptured their 20-day moving averages. This has been a consistent bounce back following the concerns associated with tariffs hitting us in early April. So I decided that we should utilize this familiar uptrend that's been working with a series of higher highs and higher lows and simply look for the software space and see what are the leaders in this space. And again, I'm not going to suggest that this is the only way to go about it. Often you'll see us in these sessions, we will scour indices, right? We'll look inside the Russell 2000 or the S&P 500, even the NASDAQ 100. But here today, what I've done is created a scan that is exclusively for software in basically short-term uptrends. So I'm certain that some of you are going to be wondering, hey, can I get this scan from you? And the answer, of course, is I'll share this scan. I'll remind you that our scans are not guaranteed for their accuracy or the timing factors, and they're not a recommendation for your use. But I am comfortable sharing this with you, so I will do that here ahead of my explanation. And I'm just going to walk you through what my criteria looks like here, everyone. So first of all, I'm going to drop that into the chat for you. There you go. Now, here's what we're looking for, everybody. I've decided that we are going to scan in the entirety of stocks and looking specifically within software. So briefly, what does this mean? This means that I am not looking to ensure that the stock I'm finding is part of an individual index, right? It doesn't have to be in the Russell 2000. It doesn't have to be in the S&P 100 or the S&P 500. Just simply be in the software space. And I want to make sure that I'm finding stocks that are going to be likely available to institutional investors. That's also a key component that some traders might consider. You don't want low price securities, and low price securities can also skew your return details a little bit. A stock that quickly moves from 2 to 4 is up 100%, but it doesn't necessarily mean that it's an excellent opportunity. And so minimum of $10 a share might be appropriate for some traders. Some of you might want to kick that up a little bit, maybe 20 as an example. but I think the setting a floor makes sense for price levels. And further, it can be important to incorporate average volume here. And what I've asked for is the average volume of the last 50 trading sessions to be at least 1 million shares a day. This ensures clear and easy liquidity for the majority of traders. And what I mean by that is an ability to enter 100, 1,000, maybe even a 10,000 share position in a larger account, and probably be capable of selling that same position. It's great to be able to buy securities, but it's even more important to be able to sell them when we want. So volume does absolutely play a part. So we're using a 50-day average of volume greater than 1 million shares. And then I built 3 custom screens. But these custom screens, everybody, or these details, excuse me, are very standard. But today, instead of basic standard as 20-day, 50-day, and 200-day moving averages, I'm looking for software stocks that are trading above speedy moving averages exclusively. So you'll notice I've got a 10-day here, a 20-day, and a 50-day. And all I'm looking for are securities that are above all 3. Okay, that means that I'm likely finding stocks that are certainly trading near highs because they're above a 10-day moving average, but also are showing a longer range uptrend, right? Potential to be in that 6 to 8 week period of time for some of the window of trade opportunity that some traders might be looking for, so-called swing trades. And you'll see what I'm talking about when we work through things a little bit here on the scan. So these, like I say, are fairly basic criteria, just trying to find stocks in uptrends. And in today's scan, utilizing this criteria, I have also created, or I had created, let me see if I can get we're going to customize my columns because there's been a change recently to creating, a column subset for yourself, something that can hold your details and we can save it. So I'm going to eliminate some of the detail that's in here. So let's see, I don't need all of this, and I'm just going to make sure that we remove all of that. I'm going to keep the last trade percent change, and I'm going to add in some detail in here, like 21-day relative strength and an 89-day relative strength, and just ultimately some columns that I might want to search or sort by, and I find that to be helpful when I'm building out my scans. The other things I might want to see are like year-to-date return. So I'll look at percent change year-to-date. Let me kick this up to just below percent change. And then also 52-week highs. How close are we to the 52-week high or to the 52-week low? And this will obviously indicate whether we've found securities that might be turning a corner one way or the other. So some other criteria by which we can sort once we have scanned. So I'm going to go ahead and save this, and I'm just going to be a little more specific. We're just going to call it short-term uptrend. All right, so I've saved my columns, and now let's go ahead and sort by year-to-date return. All right, so right up here at the top, I found a few, and we can see, 21-day relative strength. And again, just an understanding of what relative strength is here, everybody. Relative strength is not looking at the RSI as an indicator below your chart, but rather a reference of where these securities are in terms of return versus the rest of the market over the last, I believe, time frame. I mean, in this case, 21 days, obviously, or we can scour or utilize the 89 days, which is obviously going to be about more likely. So if this is 3 weeks, you're looking at basically about 12 weeks or so, right around a little more than a quarter. Now, the one that I found that was intriguing to me today for our purposes and conversation is Nebius Group, NBIS. So we are then going to, I just clicked the purple number 5 there, and that's it's going to populate my chart for me. And I see Scott answered this question from Zinc about choosing exclusively software. Yeah, Scott got to it. It's exactly the intersect with right here. But the key in this note here, everybody, is to start from all stocks. Okay, because if you want to get software that's regardless of its size, weighting, participation in an indice, then you want to go with all stocks. If you want to drill in to just the Russell or just the NASDAQ, you can absolutely start with with that and then include or intersect software specifically. Also, I have selected the entirety of software by going down to the industry groups here and into software like this and select all software. But if I wanted to be finer in my approach, I could choose systems or application as a subset or a sub-industry there. Okay. And once more, Scott is great about this, getting to my questions. Unfortunately, yeah, you're absolutely right. Some of these studies will not be necessarily available in from the scan side of things in paper money. So you may wish to utilize the scan functionality in live feature and then save, for example, the watch list that you might create from it, and then load that watch list in your paper money if that's how you might like to get working with it. I apologize that that's one little hiccup as it relates to the scan tool here. But let's start talking about this NBIS position and ways that a trader might incorporate the price action to aid them in setting up a possible trade. So we're going to look at an example trade on Nebius. So a couple of things we're going to talk about right off the jump here, everybody. This is a stock that, first of all, I should point out, we're on a 1 year, 1 day chart, but the stock actually IPO'd back here in October of last year. So it's a relatively fresh security. Okay. Now it started out with a relative uptrend in here. As you can see, we have some higher highs. Oops, let's change that. There's a higher high right off the go. We've then got a higher lows right there, right? And we continued through. We made a higher high, more higher lows, right? Higher high here. And then after getting thrown back to the matching level, we made another higher high here. And then we finally kind of broke down, right? We were below the 20-day for an extended period. And then things got a little more interesting as it started to settle down a little bit. Not terrible price action in truth, though, because when you're looking at a stock that has recently IPO'd, ultimately you'd like to ensure that it remains above its IPO close day. And that finish was right about here. And sure enough, what did we do? We came back and tested that same level before finding that foothold that might have brought traders into this position. Now, why is this interesting to me today? Why is this popping up and becoming our talking position for the day to discuss the example trade of a bull flag? Well, it's going to be because of what has occurred over the last couple of weeks. So let me do, what I'm going to do is back this out a little bit. I'm going to start from right about here. I initially, if we take a look at this pattern development and talk about a stock that had gapped up, moved upward against its 20-day moving average, utilizing the rising 20-day moving average, and some would then say validated by RSI down below, moving into bullish conditions. That is to say, over the 70 line, overbought conditions. Overbought conditions are not negative for the stock, nor do overbought conditions imply that the stock then has to retreat. In fact, many times a trend trader will suggest that a RSI trading into overbought conditions is validating the price action, validating a potential for continuation of the trend we are seeing. And so this is an interesting setup because while we made highs here and pulled back to them, we pulled back to that same rising 20-day moving average, okay? Now, as we go forward in time, you have a breakout. And this, from a concept standpoint, might be a point where some traders would have added or started a position in NBIS based on the fact that it broke out of a range and they might start thinking about things, okay? But we're going to start it. I'm carrying this forward because what I want to highlight is how the breakout led to new highs. And then, not all that uncommon, everybody, after a breakout to new highs, what do we commonly receive? We get the brief pullback to an area of support. And so even the trader who missed out on this move here, right, and said, darn it, this thing took out my high and I didn't get into the trade, that trader might be sitting here saying, all right, now I might have something to work with. Okay, and that's what we want to be talking about here. So I'm going to draw some lines to kind of validate the potential that we saw heading into today, or pardon me, heading into this day, which was the 24th. So today being Thursday, this was Tuesday. Now, this is the 2-week approximation of a bull flag pullback right into the supporting 20-day moving average. And we can draw the flagpole from the low to the high, and we see it is, according to my little bubble there, about $20. That is a very strong flagpole. Now, some of you may already be familiar with the idea of what a flag means and what a flag might imply in terms of price action, but we're going to try to cover that for you all in a little more detail here today. Now, I also, as we do this, talking about what the flag might imply, we're also going to incorporate some of our own rules into this process. How do we determine, should we be a buyer right away? Should we be a buyer of all of a position right away? Should we be a buyer of a portional position, just a piece of the action, so to speak, on what could be considered day one? So I want you to be thoughtful about this. Remember, we're looking at this chart as though it were just Tuesday of this week. It's not yet Thursday on the chart. And by breaking the bull flag to the upside on a closing basis, of course, some traders would suggest that it is the time where they'd get going on a trade. They'd start a brand new position based on the break of the bull flag, with the estimation that now that it has broken the bull flag, if it continues to hold the rising 20-day simple moving average, then that trader might assume that the opportunity extends for a $20 move from this new low to a new target high. Okay, so we're going to talk a little bit about that. Let me push this forward a couple of days and show how things can get questionable and maybe even a little dicey. So in this instance, if you would have been the buyer right on that first breakout, hey, you might be feeling a little bit uncomfortable on the next day, right? This is an excellent reminder of why some of you traders don't want to do the full position entrance on a one-day breakout. Some of you want to see a bigger breakout or a time window passing that validates that breakout. Some of you might look for 3 closes in a row as an example of having validated that breakout. And as we go forward, one more day to today, the thing that stands out to a lot of traders is going to be this 3 days in a row and fully, let's go ahead and add all my time back here, all my extended time, 3 days in a row with all 3 lows, 3 of them coming together and held, meaning they all received buying pressure that led to at least a move backward to the upside. Okay. Now, I want to answer your question 3. As it relates to the 20-day moving average here, why is it the 20? Well, the 20, the 50, the 200s, they are very commonly relied upon. Okay. That doesn't make them proper or correct for all traders. You mentioned the 30 or some other moving average length. Absolutely could be more comfortable to some of you. And Scott is doing a wonderful job of answering that. But for our example, the biggest reason I can tell you is that we're using the 20-day is that the 20-day has been clearly tested as support now at least twice. And I can say 3 times. Let me point them out for you here. The first test was right here. Okay, we broke the 20-day for the first time in months. This was April 23rd, right? And the time we fell through it is back here on February 24th. So we were below it for 2 full months. And then we got above it. And then we got thrown back. Very common scenario. Thrown back for a test. Then we rallied, holding the 20-day every step of the way until this day. and we tested it here. Again, why do we call it a test, everybody? Because that test was followed by a trade above the high trade on that low day. This was the low day in our pullback from the peaks, and the very next day we closed above the high of that low day in our pullback. And some traders would have said that's our opportunity to get long if I want to, not necessarily from a pattern basis, mind you, but just from a support test basis. Some might get into that right away based on that maneuver. Some might have waited and said, I want to see a clean break, and then I'll buy there on the breakout. And they might have done that, okay? But now, given the action we've seen over the last 3 sessions, some traders, 25% of the initial trade might have been set up on Tuesday by virtue of that original close. And then the hope would, of course, be that because you stepped in with only 25%, you were comfortable holding through that, what appears to be a pretty ugly bear engulfing candle there, right? And some traders would have been taken out of this. Now, in our case, as an example, I don't think the trader who built this the way that we're going to talk about would have been taken out of this initially. And that's because when I look at what's happening here, the likelihood is the trader would have stayed long because we didn't trade below the 20-day moving average, nor did we trade below the extended low here. Okay, so as usual, the entrance should be accompanied by an exit plan, ideally below our entrance, as well as an exit above. So we can use the one cancels other bracket trade opportunity. Now, in our example here, because today's day one for us on this class, I don't have an initial position to take in NBIS. Had we been speaking on Tuesday, we would have been talking about taking a 25% position based on a one-day breakout, okay, and feeling like, all right, we might have something to work with. But the question I'm certain that many of you are asking is, well, if Kevin, you're buying on day one here at 25%, where's our exit strategy? And I would applaud you for asking. So first of all, since we know that the 20-day moving average has been working for us along the way as an excellent support gauge, we see that that extended low down here could be important, right around 45. The low that day was 45.02. And our 20-day rising moving average today is at 46.49. So if we want to be moving on from this trade, when we get a close under the 20-day moving average and to keep us in the trade as long as possible, we probably want to incorporate something known as ATR, average true range. And the reason for that is we're trying to mitigate the risk of being intraday below the 20-day to get stopped out of the trade, but then watch the stock trade above the 20-day at the close. So that's a hard balancing act, meaning we are comfortable being taken out of the stock if it trades too low, and if that low price action is due to stock specific news. What we don't want to get taken out for is general broad market weakness. Oh, the software group is weak. We have no headlines on Nebius, but the software group collectively is weak. That's leading to weakness in the stock. And we could see the 20-day moving average. But what we want to maybe consider as an example only, remember, you can utilize a variation of this, but we're using the average true range, which just looks at the last 14 sessions and talks about the price range we've had. It's been $3.78 for the last 14 trading sessions. So as an approximation, I'm going to round it up to $4 and just suggest for our example that we wouldn't want to stay in this position if it took out the 20-day moving average at 46.49 by $2 or more. Okay? Pardon me, by $4 or more. Excuse me. So, and I'm doing 4 because I'm rounding that up a little bit. You can be as detailed to the penny as you'd like, everybody. But I like to utilize the idea of wiggle room and then subsequently ensuring that I'm giving it the proper wiggle room, but also the proper wiggle room relative to the amount of risk I have on the trade, which is to say how many shares I'm considering purchasing here. Okay. So looking at 46.49 and beneath my 20-day moving average by $4, we're going to look for, first of all, a full position, which in this case will be comfortable for 100 shares just for ease. Okay. And then when I looked at 46.49, we're talking about a stop, a market stop order, or what we might call a traditional stop order, that will be entered $4 below the 20-day moving average. So we're going to use 46.50 as our stop. Okay. And if we were to be a buyer right away, and we're going to place an example trade here momentarily, we're going to be a buyer pretty much at 52.50. That means at 52.50, we are looking at $6 of risk, right? So approximately, we can't guarantee that that is $6, right? Because if we trigger, we are going to have a market order to sell, and we do not have a guarantee of any price when we have a market order. So we have to bear that in mind. But $6 of downside risk means simply that I could, if I bought 100 shares here, that I'm working to keep my maximum loss to approximately $6. But in looking at the maneuver, well, we need to determine what would be the estimation of our upside opportunity. Well, if we are looking at a bull flag, two ways that traders might do this. You take the low move to the high move in the bull flag pole. That is about $20. The easy way to do this here in Thinkorswim is just to duplicate your line and then shift it. So I'm going to leave the first one there, and I'm going to put this line at the low of the pullback. So that line is going to be sitting on about 45, and it's going to run 20 points to approximately 65. Now, must point out that there is no guarantee in any way that we get to 65, right? Because that's just an approximation. It's a measured move target, and there's no guarantee that we get there, right? And so some traders will have layered exits that might be based on the flagpole, might be based on the range that we just took out. So 55 down to 45, for example, a 10-point range. And if you take out the highs at 50, close at least at 53, for example, some might suggest 63. So as usual, there's going to be nuance involved here. And while we discuss examples, what I'm going to ask you to take away here is to take away the process and customize the process to meet your comfort, your tolerance, and so forth. Okay? So with the process we're looking at here today, we are going to do an entrance order in the after hours market today. And the reason we're going to do that is that we have the 3 days in a row with 3-day lows held outside of our bullish flag, right? So this is giving some traders that confidence to say, well, I missed it on day one where I would have bought 25%. Day two, I didn't have to worry about because I wasn't in the position. Now, day three is a new high close relative to what's gone on since we broke the bull flag. And some traders would be fully comfortable based on this 3-day action. Doesn't mean it's perfect, and it doesn't mean it's right. And in fact, what is, right? What is perfect as it relates to technical analysis? Not much. So setting your stop here can be done a number of ways, but for our example, we're going to go with 1 ATR approximately below the 20-day moving average as our exit, and we're going to target 65 to the upside. So here's how we're going to do it, everybody. I'm going to right-click in my chart, and I'm going to buy custom with OCO bracket. One cancels the other. Now, because we are in the after hours, I am going to ask that my trade be executed in after hours. First thing I'm going to do is note my asking price at $52.49, and we're going to try and go in just a little bit in between, and let's see if we can get it. We're going to go in at 52.45. I have to have it as a limit because in the after hours, PM, we are in that window where I can utilize PM exclusively here. So 52.45 limit price in the after hours specifically to buy 100 shares of NBIS. If we get executed, then we'll have a good till canceled exit at $65 a share and a stop exit that we determined that we wanted to be $4 below the 20-day simple moving average of 46.49. So we're going to put that in at 42.50. Okay. So 42.50 here. And I'll just remind you once more that this is by no means perfect, right? The biggest issue that I can see is that by entering this at 52.45 with a risk down to 42.50, initially here, we're taking on a fair bit of risk, right? 10 points, meaning our max loss is going to be about $1,000 based on our entry here. So we have to be aware of that. Now, max loss of 1,000 fits my tolerance zone, okay, of $1,000. That's fine, but it might not fit from the standpoint of risk versus reward necessarily. We're looking to make about 12 points to the upside for the risk of about 10 points to the downside. Many traders are going to look for something a little more likely to be $1 of risk for $2 of profit, or if you can do better, $1 of risk for $3 of profit, something along those lines. So some considerations there for you, everybody. So we'll go ahead and place this. Let's see. I got to change this one to good till canceled, and then this will pop up for me. So let's see if we can get execution here, everybody. We're going to buy 100, limit at 52.45 or better. If we get it, we'll have a good till canceled sell order at 65 or a good till canceled stop at 42.50. And the reason we're selecting that approximate 42.50 is because if we got down that far, everybody, we'd be making a new short-term intraday at least low. And some traders wouldn't want to stick with it. And they would say, you know what, my timing was off. Or some of you might want to be even tighter and say, I don't want to use an ATR. I prefer to do the closer to the 20-day moving average. That's your call too. Have a plan with which you're comfortable. Okay. Now it doesn't have to be necessarily ATR. In our example, we are using ATR. Okay. One ATR below our supporting 20-day. But some of you might use 1% below supporting 20-day moving average, okay? Just as an example. So once more, we've entered the trade, or excuse me, we have placed an order to enter the trade based on the movement, the 3-day move outside of our flag, with a potential $65 target, right? Based on this maneuver here, okay? The potential for the same flagpole that we've just seen to play out bullishly to the upside, and that'll give you approximately 64 to 65 to the upside, somewhere in that vicinity, okay? So that was our goal as it relates to this one. Now, we haven't gotten the execution here just yet. One of the things I'm noting is my orders aren't showing, so I'm going to click that here. And I saw a question that Sri had about my tools here. Let me first apply this. So this has my order, as you can see, everybody, my entrance, my if we get executed, my stop, and if we do get executed, my limit. Let's see if we can get this order to fill. So I'm going to change this with a quick cancel replace, and we're in at 40. So they move. So here we're going to go just to the asking price here in the after hours, so that we can put the position on, so we can have our example, everybody. So I'm going to go ahead and hit submit, confirm, and send. Wait a minute. That should maintain everything. So I'm going to go ahead and hit send. Let's make sure that my brackets are held. Okay, so we canceled the original. Okay, now we have the new limit at 52.49 to, hang on, did I change that the wrong way? Let me double check. Nope, that's still at PM. Yeah, we should be seeing execution on that. Let's change this to make sure. Good till canceled and extended hours. I just want to incorporate it that way. So this will be a little bit more detailed for us on the trade. So let's see if that gives us execution at some point here today. And I'll be honest, I'm not sure why we're not gaining the execution. So I may have to come in and make this a buy order in the regular session come tomorrow. I'm a little bit surprised that it's not filling for me here in our session because I am used to seeing that type of trade execute. So we will see what plays out there. I did want to answer your question, Sri. I think your question was about the My Tools box, which I do use frequently here, everybody. Let me bring that back. Here it is. Your question was, how can I get it to look like this, I'll bet, as opposed to appearing on the chart? That's up here with the gear icon, and it's down below under settings, My Tools. Single panel is what you want to see, but if you have it by default, you'll see it like this, everybody. It appears in this shadow above, which can be left as it is. Okay, goes away after a couple of seconds. You can also pin it to your chart so it stays there. And then you can use it very quickly as well. You don't have to use it as a separate box. So if I just wanted, in my case, I just want to see this, the 10-day simple moving average, there's that, just the 20-day, just the 50-day, just the 200, or here's my 20, 50, and 200. And here's one I've added that has the 20, 50, and 200-day simple moving averages, but also has the banner for return details. So that's a great little bit of assistance there if you're trying to make sure that you can see all of that detail. As far as getting these into your tools, it's the gear. Come to the gear, click the gear button, add button. And then you get to choose what you want. Do you want it to be your drawing tool? Do you want it to be one of your preferred studies? Maybe it's one from the all studies. Maybe it's a study set, which is what I'm referencing, by the way. So that tool is fairly helpful, to say the least. I mean, I use those things quite frequently. Those tools are exceedingly helpful for the individual who's, charting and trading frequently. I would absolutely mention that. Now, as far as our trade is concerned, since we did not get execution here today, I want to wrap this up with a thought about how we could do this in the regular session for tomorrow. So let's change my order. I'm going to cancel replace. And instead of it being a good till canceled, let's see if we can trade through the high trade here from yesterday, which was 54.59. And let's just take it by 1% above that amount. So 1% above 54.59. Let's see, would be 55.13. Okay, some of you would like to see that amount of execution or that amount of price action above a resistance to validate an entrance. So in this case, we'll reset, call it a buy stop order for the regular session tomorrow day, and it's going to be at, I said 1%. That's not right. That 55 is way too high. What did we say here? High yesterday. No, that is right. Yeah, 55.13. So we're going to make our entrance at 55.13 stop, which means, again, market order to purchase, right? Can't guarantee price. If you want, you could make that a stop limit order, which would then say, if triggered at 55.13, buy it for maybe 55.25 or less. That would give you some wiggle after trigger. Okay, that's one option. But I want to give us the chance to buy into this on a potential breakout maneuver, okay? And that's why we're going to change this to a buy stop order. Note when I do that, everybody, that my existing stops maintain, okay? So we have now got a buy stop order to pick this up on, as opposed to, the initial open tomorrow, only if we take out the highs that we have seen by more than 1%. And in the future in this class, everybody, we will talk further about breakout maneuvers that take out levels of former resistance. This isn't that. This is another bull or a bull flag opportunity that has now traded outside of the what we would call the cloth portion of that flag right through here, right? Traded outside of it for now 3 consecutive sessions, and that's why we are looking at this for our first live example in after the close today. So hopefully we answered some of your questions. I know Scott was pretty busy here, and I can't give you a definitive answer as to why I was unable to force the trade for the after hours position, but we'll see if we can't set more trades like this in the future that are going to lean into taking advantage of the subsequent regular session as opposed to after hours sessions. So hopefully you all felt like we learned something a little bit here today. I did share with you the scan. We've placed an example buy order with one cancels other brackets that can take us out for profit or take us out for loss as well. But again, the hope being that one of these end scenarios plays out, and we can simply walk away after having made the trade, knowing that it's either going to execute a stop or execute a limit trade, and we're going to take out a profit. So we'll see how this one goes. Hopefully we see next week that we got execution and that we've had a trade that we can further discuss how to manage next Thursday. So that's going to be our first intro to After the Close, everybody. Thanks to Scott Thompson there in the chat. Follow us both on X, Kevin Horner CS, Scott Thompson CS. Hit that thumbs up button down below for me as well if you like today's initial class. And again, thanks for being here, everybody. But same channel next week, 2 p.m. 2 p.m. Mountain, 4 p.m. Eastern. Let's do it again then. I look forward to seeing y'all again real soon, everybody. Thanks.